Hello, welcome to Salaried Individual Channel. Today we'll talk about my top 5 index funds which I'm investing for my long-term goals. These index funds will cater my future financial goals like children's education, retirement, etc. But before that, let us go through what exactly are the index funds. Index funds are defined as investments that actually mirrors the performance of benchmarks like the Nifty 50, Sensex 500, etc. So in simple words, a simple index fund is a portfolio of stocks or bonds designed to actually mimic the performance of the benchmarks. The most common example is the Nifty 50 index funds, which mimic the performance of the Nifty. Index funds is also known as passive investing because in this type of investing, you actually don't have to manage your portfolio actively. You invest in the index funds for the long terms, whether as a one-time investment or through the SIP. So how to invest in the index funds? You can invest in index funds using mutual funds or ETF. You can buy one-time lump sum or you can invest via the SIP route. So the question is, are index funds good investments? Index funds are actually one of the popular way of investing for long terms because it offers simple yet effective way to gain exposure to a broad, diversified portfolio at a relatively lower cost. Since index funds are passive investments, they have lower expense ratio. Okay, so the expense ratio is the annual maintenance charge levied by the mutual funds. More than 90% of the active funds are unable to outperform the index funds over a longer period, say 10 years. So if your investment horizon is for more than 10 years, then I would suggest you to invest in index funds. This is not a financial advice. Do consult your financial advisor with more information. But if you are investing in the long term, index funds are the best investment. If you are a beginner investor, I would recommend you to go through the video comprehensive guide on beginner investors, top right corner, where you can find what to invest, how to invest, and all the investment options you have in front of you. So since we know that most of the active funds cannot beat the index in the longer run, so why complicate investing? We can actually create a portfolio with just 5 index funds for our long-term investing. So let's go through the top 5 index funds for the long-term investing. Number 1, Nifty 50 Index Fund. It invests in the 50 largest companies listed on the National Stock Exchange, commonly known as NSE. It actually gives you a broad market exposure and the expense ratio is quite low. You can invest in the Nifty 50 Index Fund via mutual funds or via ETF. I have been investing in Nifty 50 Index Funds via mutual fund and the fund is Navi Nifty 50 Index Funds Direct Growth, whose expense ratio is just 0.06 and the exit load is nil. If you are investing via ETF, try to invest in the ETF which has higher volume like the Nifty Bs or Nifty I ETF. If I take 25 years data, then Nifty 50 has given around 14.8% annualized returns, which is quite good. Number 2, Nifty Next 50. It invests in the next 50 largest companies after the Nifty 50, which gives the stability as well as there are big companies where it also gives the advantage of growth potential. In my case, I have been investing in this fund via mutual fund and the fund is ICICI Prudential Nifty Next 50 Index Direct Growth, whose expense ratio is just 0.31%. If you are investing via ETF, again, try to invest in the ETF which has higher volume like Next 50 IETF or UTI Next 50. If I take 20 years data, then Nifty Next 50 has given around 26.4% returns. This gives little higher returns than Nifty 50, but again, it is little more riskier than Nifty 50. Number 3, Nifty Midcap 150 Index Fund. This index includes the 150 largest companies in India that fall under the mid-cap categories. That means they are mid-sized companies, but still have the high growth potential. I have been investing in this index fund via ETF and I am investing in Midcap IETF, which has a good volume. Again, it is little riskier than Nifty 50 and Nifty Next 50, but have a high growth potential. It has given around 26.21% returns since inception. Number 4, Nifty 500 Index Fund. This index fund represents top 500 companies listed in National Stock Exchange. In terms of market capitalization, it includes large companies as well as small companies, which gives you a mixture of stocks. There will be some overlapping of stocks between this fund and the previous 3 index funds, that is Nifty 50 Index Fund, Nifty Next 50 and Nifty Midcap 150 funds. But again, since it's a broad based index, it includes all large cap, mid cap and small cap, thus a little overlap is fine. It actually provides the diversification you need in your portfolio across sectors and market capitalization. I have been investing in this index fund using the mutual fund, that is Motilal Oswal Nifty 500 Index Fund Direct Growth. You can also invest it in via ETF, that is Moni 50 500. It has given around 21.77% returns in the last 5 years. Number 5, S&P 500 Index Fund. This index fund invests in the most widely recognized benchmarks of the US stock market. It includes the top 500 of the largest publicly traded companies in the United States. Since it invests in the top 500, it actually gives us the advantage of the broader market in the US. I have been investing it via mutual fund, that is Motilal Oswal S&P 500 Index Fund Direct Growth. The only problem with these funds is that there is little higher volatility as there is some restrictions by the RBI. It has given over 11.1% returns in the last 20 years. So these are the top 5 index funds in my portfolio, which I have been investing for my long-term portfolio. Before starting the investing, I would recommend you to have an emergency fund. You can check the video in the description for the same. Let me know if you are investing in any of the index funds I talked about, or is there any other index funds which are equally good for the long term. Do share your thoughts. Thank you for watching. Please like, subscribe and share the video if you have liked it. Thank you.